Well, hello everyone, and thanks Merge for this space. I'm Diego Diaz. I'm the head of crypto of the Argentine FinTech Chamber, one of the main organizations in Argentina with more than 400 companies, including crypto, VASPs, tokenization, lending, payments. But we are here not to talk about me, to talk about payments and Web3 payments. And we have a little bit time, so let's start. Here with me are Paula Petit, VP of Strategy and Growth of Range, Esteban Sadurni, Director of Digital Assets and Blockchain in Checkout, Andrew Stackwitz, Head of Solution, Pel, sorry, I don't know how to spell your surname, CEO of Notaben, Damien Fontanil, Business Development of Societe Generale Forge. Let's start with Esteban, right? Well, Checkout has been at the forefront of digital assets adoptions and has a very complete suite of payments products. How do you see the role of stablecoins and tokenized money evolving in global payments flow over the next few years? Only few years, or few months, if you prefer.
Thank you, and thank you for having me. We see a large adoption already in our ecosystem. First, companies like Checkout.com or others offering some sort of stablecoin services to our merchants, such as stablecoin settlement, for instance. And we also see right now Fireblocks or Circle creating their own payment networks, partnering with major institutions across the globe. And on our end, it's very important cooperating with Visa and MasterCard. So we also see them creating a lot of use cases where we could potentially connect to them and also use stablecoins to provide more or faster settlements to our merchants. On that side, we see also the request from our merchants is, OK, we process payments for you in fiat, whether you're using your Visa, MasterCard, Apple Pay, Google Pay, and then we collect those funds from the schemes. They settle to us the next day, and then we have to settle those funds to the merchants. And where we see more requests from merchants is there, where they want to receive their funds, perhaps in stablecoin. Another part is obviously the schemes sending us stablecoins, as I mentioned before, or where we see also interest is consumer payments, where global companies ask Checkout, OK, we want to expand to emerging markets. What kind of payment methods or local payment methods are you offering there? And stablecoins become one of the questionables there.
A few minutes ago, we were talking about Argentina, but I want to ask about Argentina, about Latin America. How do you see in Latin America payments, but crypto payments?
So we operate with global companies, and one of their key markets, of course, are Brazil, Argentina, Mexico. And particularly in Argentina, they are asking a lot around crypto, about stablecoin, especially because it's a market that has a lot of volatility. And as they want to move also money across the globe, across their global cost centers, I think stablecoin is a very good use case for them.
Yeah, in Argentina, we don't have a very high flow of cross-border payments, but yes, in terms of crypto adoptions and every use crypto apps for the people to use daily. Well, Andrew, sorry if I pronounce bad your surname.
It's OK.
What the advantage does the network like Hedera offer compared to traditional blockchain payments?
So I think when people are coming to Hedera, they're fundamentally coming for institutional trust. The way that traditional blockchains tend to work is you have many anonymous validators who are sort of held together loosely by economic incentives, whereas with the Hedera network, you have Fortune 500 companies like Google, IBM, Dell, names that you trust, people that you want to do business with. So people tend to want to engage with us on the basis of our institutional backing. There's also the fixed fee component of our chain. So most traditional blockchains are the fees that you pay for transactions are decided by a fee market, which can have spikes depending on congestion. In Hedera, a transaction fee is always 1/100th of a penny denominated in US dollars. So for like a CFO, it makes it a little bit easier. I know I can build my use case. I know how much it's going to cost me to run my use case no matter what happens on the network. And like the last thing that people think about when they think about Hedera is fairness. So because Hedera, because of the unique hash graph algorithm, there is no, we're not beset by things like minor extractable value or front-running attacks, things that happen in other networks. You know that when you submit your transaction, it will be ordered fairly, and you'll get the result that you expect.
Well, that's a huge advantage, the map, no? Right? How do you see challenge related to fragmentation in the tokenized asset industry?
So it's been really exciting this last year. As somebody who's been in the blockchain space for a long time, 5 years ago, we have a panelist here from SocGen Forge. 5 years ago, SocGen was maybe like the only player, the only big institutional player trying to put stablecoins out in the world. Now every investment bank, every central bank, every payments provider, everybody is either issuing a stablecoin or they have their own stablecoin strategy. And that will create a challenge because you have all of these different coins on different rails. And when we really want to get full industry adoption, we need to make it so that individuals on the retail level don't have to think about what chain they're using, so that like treasurers and companies don't have to think, okay, I have a little bit of cash on this chain, a little bit of cash on this chain. It needs to be seamless.
We are in the stablecoin era right now.
Absolutely.
It's another stage of crypto landscape. Well, Pele, right? Pele. Why do you think that B2B payments are the most significant opportunity for stablecoins?
So, well, first of all, a little bit of background about what we do is that we help companies, at least in the beginning, the main thing we do is we help companies implement the travel rule for crypto. And to do that, we've built essentially Swift for crypto over the last 5 years. And we are working with 250 to 300 different institutions who are transacting every day, processing around $5 billion of transactions a day on our network. And through that, and through our conversations with a lot of different people around the world, whether it's PSBs, banks, almost universally, B2B payments is what everyone wants to solve for. And when I say B2B payments, B2B cross-border payments. But there's been a lot of challenges that people have faced creating good functional products for B2B payments so far. For example, crypto like Swift is a push payment mechanism, meaning that the sender of the funds have to initiate a transaction. To be able to get B2B payments working, we really need a pull payment flow, which is also what the credit card networks do, where companies can initiate transactions from their internal business flows. And that's one thing that we're launching now. And there's a massive opportunity. There's a lot of interest in it because we can start taking the benefits of stablecoin, meaning instant settlement, and also then apply it to business transactions and also lower the internal costs that companies have with payments today, whether it's Swift or stablecoins.
Can you provide an example of B2B payments? Because probably anyone knows a little bit about B2B payments. So one example.
Yeah, so typically, like an example that, like if we talk about the Latin American flow, for example, a very common flow is a Latin American business that is invoicing a customer in, a business customer in the US or in APAC, or the other way around. So as part of that, you send an invoice and you hope you get paid. And if you get paid, you hope it goes to the right place and the right, you can match it to your accounts receivable so you can close your books and you can process a shipment, for example. So that is kind of the core of B2B payment flows. It's business payments, and I've seen lots of different estimates. I'll just take kind of the middle of all the estimates. I see that these kinds of payments is about $120 trillion a year over Swift of these kinds of payments. Again, I see so many different numbers from 50 trillion to 190 trillion. I guess it depends on, I'm not sure the reality of it, but it's a large number, I think we can all agree on.
It's a very big number.
Yeah.
What are the most significant challenges found by these companies operating?
So for the companies that are currently operating in the stablecoin space, we've all heard stablecoins are great. They eliminate all the problems of cross-border banking, except most of the companies that are building solutions using stablecoins are forced to implement essentially cross-border banking. And it's a bit of a irony that they have to do that, but to be able to implement the famous fiat stablecoin sandwich, where, for example, you send money from a Spanish bank account via SEPA into a payment provider who then sends stablecoin to Argentina and out the other side in the local banking system.
Not local banking in Argentina yet. Stablecoin in local banking in
Yeah,
Argentina
I think
are not allowed.
Argentina is a great case. I use it because people will prefer actually having a stablecoin.
People prefer stablecoins
Yeah.
instead of USD.
But what happens is that people are looking to build these bilateral relationships to be able to support all of these fiat links. And that means bilateral agreements, a lot of very complicated due diligence on both sides, pre-funding, technical and product integrations. It's a very expensive part of it. But having an open payment network like Notabene, it means that you can focus on your local market, and then you can use the benefits of the travel rule, which allows you to trust the other institution on the other side, just like with a SWIFT payment, just like with a SEPA payment. You don't have to perform KYC of that company there. And that gives you the right to eliminate a lot of these complexities that people are forced to do to implement stablecoins today.
Well, thanks. Damian, Société Générale, it's okay, right?
Perfect.
Is one of the major banks issuing regulated stablecoins, right? So how can stablecoins facilitate payments?
Yes, so we started issuing stablecoins in 2023. So Société Générale Forge is the digital asset subsidiary of the Société Générale Group. So our DNA is really about banking standard, trust, and compliance with regulation. And so we started early in the game, as you rightly pointed out, by being the first subsidiary of a bank issuing a stablecoin, complying with the French regulation, now complying with the EU regulation since July of last year. And we started with euro. In June, we launched on the dollar. So we now have 2 stablecoins available on various networks, Ethereum, Solana, and 2 other networks will come soon. And they are ideal for payments, because when you think about it, a lot of B2B payments are sometimes struggling depending on the currency and the corridor, obviously, but people are asking, where's the money? The issuer will say, I've sent the instructions, but the receiver still, after a few days, would not have received payments. The beauty of public blockchains is that you can send the proof that effectively the stablecoin was sent from this wallet to the recipient wallet in a matter of few instances. And so you have a new way of transferring value, transferring money, because by law this is electronic money, and in full compliance with rules and regulation. And the true game changer is really that stable coins are bearer instruments. You have them in your wallet. You don't need a bank to operate it. You can send it to the recipient wallet of your choice, and you are in full control of your transfer of money. That being said, you need many asset services around this, Notabene being one of them, and as well payment service providers to incorporate in the distribution rails, because issuing a product is one thing, making it available to the users is another one. That's why we are very keen on building a partnership with exchanges, brokers, payment service providers, and fintechs, in order for users that we don't know, being able to acquire stablecoin and transfer it, do the on and off ramp, and complete the full cycles, so that in some instances, stablecoins are more efficient than traditional rails. It's not the solutions to every payment, but it is on specific cases. And where we stand out is really our banking DNA. Stablecoins have been issued by private company to start, but now you're seeing growing interest from banks to also being the supplier of cash on a new infrastructure structure called blockchains with the transparency of transactions. And that's where I think the banks are expected to come in. Not only the banks, there's also a lot of discussions around CBDC, but these won't be made available to everyone. You also have tokenized deposits, which are live and performing well, but they are constrained within a bank network. And stablecoins have this ability to transfer easily between parties.
You speak about adoption, right? So how can banks collaborate with fintechs and DeFi to drive adoption?
So adoption with fintechs in a wider sense, it's going to be, as I mentioned, a payment service provider, exchange brokers, entities providing off and ramp that provide access to the stablecoin, monitor the transactions for regulatory disclosure or for tax monitoring. And that's all this ecosystem of services that we partner with, or sometimes we don't know of, that allow customers to make the best uses of their stablecoin. One of the criticism that was made about stablecoin is that by regulation, they are not allowed to pay yield. And that's a true issue. We recognize that. That's why we have supported the launch of 2 Morpho vaults. So we're entering the world of DeFi, allowing people to earn yield on their stablecoins. So they can lend and borrow stablecoin against other crypto assets. And that's a great opportunity to either perform payments with stablecoins or invest with stablecoins and really get the benefit of both worlds, traditional finance and DeFi.
At the end of the day, we all want to use the benefits of DeFi in our daily, but in a regulatory framework, right?
Absolutely.
So at the end of the day, we expect that. Well, Paula, we talk about adoption, we talk about payments, technology. Now, what is, in your opinion, the bottleneck today for adopting crypto stablecoins flows into payments?
Hi, Paula from Range. So we did talk about the technology and the regulation and the UX. So from my point of view, I think the technology's been solved for a bit. We've had stablecoins for a bit. They've been starting to be more proven over time. This past year, we had a huge boom in the regulation side. Tons of clarity came through. So I think those 2 stepping stones have been made huge movements towards being solved. So to many of the points already said here, I think UX is really the next step, and that comes from the user point of view, that comes from the integration point of view. It needs to be easy for wallets, banks, normal users to both implement it and utilize it. And to Andrew's point as well, I think we are seeing this boom in so many stablecoin products and rails and coins coming out right now, which is great, but a little kind of everywhere. So we also need to have kind of concise ways to be able to monitor all these things to continue to be compliant. So just calling to actually some of the stuff that we've done at Range. We did launch our Explorer, or our Stablecoin Explorer, which does bring in over 100 chains and all the major crypto stablecoins. So you can see it all from one panel rather than having to go to all the different chains. So I think movement like that towards becoming more chain agnostic will be pretty good there. And then, just making it so you can transact through any stable coin, make it compliant, and the user doesn't have to worry about it. So I think that's the next big hurdle. But I'd say the industry's moving pretty quickly through these. So excited to see where they go.
What data should the CFOs, for example, and risk teams demands from a stablecoin payment rail?
So 2 sides. So the CFO side is obviously the financial side. So you want to make sure that any stablecoin transactions are efficient, that you know what gas fees you're going to pay, the FX fees, any bridging fees that go alongside that, and that those are clear from the beginning of the transaction, and that you're pulling the best pricing. So we can be very competitive against the standard FX rates that are currently paid. So that's kind of on the CFO side. And then kind of from the risk monitoring side, you want to make sure that you are travel rule compliant, which is, I think, something that Nota Bene is helping quite a bit with. And, we've integrated into our compliance flows. That you're travel rule compliant, that you're not interacting with wallets with counterparty risk, wallets on the sanction list, blacklist. So you do want to make sure that you are working compliantly. So those kind of are the two major things that I would suggest CFOs and kind of the risk monitoring teams look at before integrating anything.
Well, we have time for only one question for all. So to conclude the panel, I want to ask every of you, what impediments do you see to stablecoins adoptions in Europe or in Latin America? The impediments, the stopper. Damien, if you want to start.
It's where there is adoption, and that's where we see is in countries where you have difficulties with traditional banking rails. In Europe, you have SEPA that is quite efficient, so for European transfer, things are running smoothly. You can have these instant payments that happens quite often. So I think it will be for some corridors, some jurisdictions, some type of actors that face difficulties, and stablecoin would be a good alternative.
Yeah, efficiency is a big deal particularly for cross-border. As I said, I agree 100% with what you say. Like in Europe, SEPA works great for many use cases, but then getting that efficiency across is really where stablecoins come. So SEPA, there's also the PIX in Brazil, for example, that's doing great on that particular front. But a lot of these can only really be done with a centralized government mandate, and you can't really implement that level of efficiency using traditional means for cross-border, and that's where stablecoins come in, and it's a really big improvement.
Efficiency, right.
Probably similar way that my colleague spoke.
You can repeat the answer.
I mean, we are seeing that a trend from our global merchants going to emerging markets, asking for local payment methods. Like Peter mentioned about PIX, it's becoming, I think, 90% penetration in the market. So I think stablecoins kind of jump into that alternative payment method mechanism, but it's more global, where merchants can implement the same way they implement, for instance, in Brazil or Argentina. They could go the same way to Africa, Nigeria, or emerging economies with the same mechanism as standard. Well,
something in Argentina, we use stablecoin to pay to PIX. In Brazil, when Argentinian people goes on holidays to Brazil, the Argentinian pay using the wallet, an Argentinian wallet, but in the back, it's a stablecoin swap between Real and USDT, USDC, or whatever. Paula?
I missed the question when you first asked it. Can you repeat it? I'm so sorry.
What impediments do you see in terms of crypto to stablecoins option?
So I mean, it's really just kind of making it efficient and simple. So for us, it's making it where you can transact in stablecoin across any wallet. That's why we made kind of our Faraday API, which allows everything to be compliant and swift and easy. I think it's just making it easy for the next.
So everybody talked about efficiency, and of course, efficiency is important. But the people often think about efficiency in terms of, like, people will quote, this stablecoin transaction costs a hundredth of a penny, I'm guilty of this, in the same way, and they will compare that to a credit card transaction or an ACH transaction and say, look, the fees are 50,000 times cheaper, or whatever it is. But that's not really a fair comparison, because what credit cards are baking in are things like chargebacks and fraud protection and things that are really useful user protections and things that allow for user safety and a good user experience. So when we're able to build up our stablecoin solutions to have user experiences that are comparable to what currently exists in the traditional banking sector, I think that will really accelerate our adoption.
Well, we are running out of time, so I want to say thanks to all of you. See you in the next panel.
Thank you.
Thank you.